So right now we have what we're calling at Lord & Richards a window of opportunity, an opportunity to take advantage of current low tax rates to move money from your money that's going to be forever taxed to never again taxed. Say, Colin, that sounds too good to be true. Hey folks, I've got clients doing it right now. I've got clients who will never pay taxes in retirement. Hi, friends. This is Colin Richards. I'm president and founder of Lord & Richards, and we are helping people just like you every single day to retire financially independent or to stay that way. And I'm excited to be in the second of a three-part series here on the Lord & Richards Show on how you can start building a plan to reduce or eliminate taxes in retirement. At Lord & Richards, this is part of our Lord & Richards roadmap that covers every critical area that's important to you to be financially independent in retirement. And part of that is a written tax reduction plan. And I love written tax-free plans, right? I love tax elimination plans. So in this particular episode, I'm going to talk to a group of you who are in a position to start building a tax-free retirement. And at minimum, if you're well down the road and maybe can't put everything into place that I'm going to talk about today, I want you to start building tax-free streams of income in retirement, because that's going to help a lot. As we learned in our previous segment on paying too much in taxes, that the more income you earn over and above your Social Security, the more your Social Security is taxed. So how do we start that? Well, let's start first of all with this question. Are tax rates high right now? Now, a lot of you are going to say, yes, I know, because just seeing that money go out of your paycheck or get withdrawn from your IRA withdrawals, that's tough. It really is. But let me tell you something. Today, we're in historically low tax rates, and that's set to likely continue if the current administration continues to work with Congress to keep taxes low. We'll see, right? It's a coin toss, but we'll see. But the highest bracket today is nowhere near it was when Ronald Reagan was paying taxes. You remember that guy? President of the United States. But before that, what was he? He was an actor in Hollywood. And he would only make reportedly 2 movies, and he could get that done in about 6 months. After that, every dime he made, over the $100,000 he made per movie, was taxed at 90%. Would you keep working if 90% of the money went out the window? I don't think so. So right now we have what we're calling at Lord & Richards a window of opportunity, an opportunity to take advantage of current low tax rates to move money from your money that's going to be forever taxed, positions that will continue to be taxed for the rest of your life, to never again taxed. It's like pulling money from your right pocket and putting it in your left and never having to pay taxes again. Say, Colin, that sounds too good to be true. Hey folks, I've got clients doing it right now. I've got clients who will never pay taxes in retirement, or who through devices and strategies and investments that we put in place in their Lord & Richards roadmap have helped them to reduce and eliminate taxes. So what are we going to do? Well, what we've got to do is begin to think about what it means to move money from one place to another. You've got several buckets when it comes to taxation in your portfolio. Most of us have income of some kind, so income tax. Our IRAs will be subject to ordinary income tax. Our 401ks will be subject to ordinary income tax. So those vehicles right now are in the second bucket, tax deferred. But in the future, you're going to pay income tax on those. So income tax now from income you might be receiving, income tax later from those tax deferred buckets. And then we've got another bucket called taxable. That is money, capital gains. That is money that is subject to right now generally lower tax rates, because it represents appreciation in the value of an investment, such as a stock or real estate. And so that right now is capped at 20% with the Medicare surtax of 3.8. So for some taxpayers, that's quite a bit lower than their maximum income tax rate. So 3 buckets so far. We've got our taxable now, we've got our taxable later, that's tax deferred, and then we've got our capital gains tax bucket. But there is a fourth tax bucket that I want us to make sure we're using, and that is our tax-free bucket. You say, well, Colin, how do I get things moving from one side to the other, gradually moving from taxable now to taxable later to taxable at a lower rate to no taxes at all? Well, that's what we do at Lord & Richards. I'm very excited that we have tremendous capabilities on our team with certified financial planners and even an enrolled agent with the IRS. No, that's not someone who's going to take you in for tax evasion. That's somebody who has the qualifications to represent you before the IRS, to actually prepare returns and to actually prepare a detailed, comprehensive tax plan. And whether you consider yourself just kind of a normal American with moderate income or moderate investments, or whether you're in a position through business or investments or inheritance that you've got a lot of money to potentially worry about being a tax target, we can help you. We're doing this every single day for people just like you. So let's talk about a couple of ways we can do that. First of all, we can start moving our money out of the tax-deferred bucket by paying some taxes right now. You say, I don't want to do that. I don't want to take the hit. Colin, can't we bypass that? If you're in that tax-deferred bucket, we're going to need to get those taxes out of the way. Do you want to pay taxes now when we know we're in historically low rates? Or do you want to roll the dice later when we might be in potentially higher rates? And especially if you pass on an IRA, a 401k, a tax-deferred investment to your kids, we call that a tax time bomb, because now they're on a ticking clock to get that money out at a pretty fast clip, because the IRS will no longer allow them to take that over their lifetime. They have just 10 years to do it. Folks, that's a time bomb, because we don't know what rates you're going to be when you're passing that money on to your kids. We don't know what rates they're going to be under. It could be onerous at that time, and yet they're forced to take the withdrawal. Let's not do that. Let's leave a tax-free legacy behind. So whether it's in your lifetime or your legacy, let's figure out how to get from forever taxed to never again taxed. Well, one of those ways, we call it an IRA rescue. We just start pulling money gradually over time, keeping you within reasonable current rates, which are historically low, and slowly moving that money out of your IRA to other tax-free vehicles, such as a Roth IRA, a conversion process. Those who haven't been able to build up a Roth IRA on the back end can now take money from IRAs and put them into a Roth. We call that kind of a backdoor Roth. It's a deceptive name, but the idea being that wait until after you've contributed to your IRA and then convert that to a Roth, paying the taxes now. So we can get around the limitations on income. We can get around the fact that you've built up these tax-deferred vehicles. And then we can also start exploring other tax-free vehicles beyond the Roth that you can invest in with fewer limitations and with potentially greater potential reward. We're going to address that in our very next segment. We're going to start talking about not just how to start building a tax-free retirement, but how do you get into vehicles where you can take money out tax-free during your retirement. Well, folks, this is part of the comprehensive process that Lord & Richards offers that you're seldom going to find out there in the brokerage and financial advisory world. We're doing it every single day for thousands of people just like you. And we would be excited to meet and talk about your dreams, your goals, your values, and how we can help you achieve true financial independence or maintain it if you've been fortunate enough to achieve it. It just starts with a simple phone call.